Hello, welcome to this week's Market Carver. My name is Andrew Thrasher. I'm the portfolio manager for Financial Enhancement Group. I'm joined by Zach Unger, senior analyst, and we have two really interesting topics to cover this week. One, we're going to be looking at some of the upcoming possible changes with interest rates, and Zach's going to be showing a really interesting statistic from the ETF market. But first, let's focus on the Fed. Last week was a very big event for Fed policy. They meet in Jackson Hole, Wyoming. All the Fed governors come together, and this is historically where we often get a lot of policy announcements or big changes at the Fed whenever the Fed governor makes his final speech. This one was a little bit less maybe eventful as we've had in prior years, but nonetheless still important and still impactful. What Powell told us last week and what we're starting to look forward to in September is we're trying to manage and understand the changes that are coming for interest rate policy. We're seeing a lot of pressure being put on the Fed from the White House administration that we really need to get policy or get interest rates lower. And so we were very interested to see how would Powell react to this and what type, having been very data dependent in the past, how would he explain policy going forward? So there's two very key points that the Fed is tasked with managing. One is looking at the labor market, looking at jobless claims, really trying to manage the labor market in the US. The second one is watching inflation data. So the two charts we're showing here on the top panel is a 1 month average of initial jobless claims. As we start seeing the labor market begin to suffer, we start to see jobless claims increase as more people go on unemployment. You can see they're going into kind of the middle of your screen into the recession in 2008, 2009. We saw an increase in the labor market, and then we saw a big spike in 2020. And right now it's been fairly manageable. If we look at the bottom panel of our screen, we have the inflation data. This is looking at consumer prices. And something that Powell's been talking about is how both of these data sets have begun to normalize or at least stabilize. Some of the comments that he made was that the risks to employment are rising and can be materialized quickly, but we're currently seeing a balancing between supply and demand within the labor market. Powell also commented on tariffs and the impact they're having on consumer prices are clearly visible, but could be short-lived as they still have potential impacts as they could have upward pressure on prices. Finally, his comment again was about stable employment rates could afford the Fed the ability to proceed carefully with interest rate changes in September. He does note that he doesn't expect that we're going to start seeing a very dramatic or very fast drop in interest rates, but because we have some stabilization in the data that we could take away some of the tightness that's been caused by the increase in interest rates. So now the market is beginning to really expect a point decrease, a drop in interest rates come September. Now we're going to shift over to Zach, who's going to look at the ETF market and some interesting things happening there. Zach?
Yeah, so there's a changing dynamic in the universe of investable assets. We'll put a chart up on the screen here that shows in yellow the number of US listed ETFs versus the number of US listed companies there in black. You can see the number of US listed companies over the past 15 years or so has remained fairly static, but that yellow line moving sharply up to the right has shown the dramatic acceptance of ETFs as investable assets and recently reached a new milestone as it surpassed for the first time the number of US listed companies. The pace at which these ETFs have been brought online by issuers is continuing to increase. About a decade ago, 9% of the investable universe was ETFs. Estimates now are that roughly a quarter of the investable universe are ETFs. And so the pace is the number of ETFs that are available are quite large now. And the pace at which they're being brought online is also quite large. In June alone, there were 108 new ETFs that were launched, which is an all-time high for a single month. We're about 150% of new ETFs this year relative to the year-end data last year. So issuers are continuing to bring these things online. And what's really interesting, if you look at the underlying ETF strategies, by and large, at the beginning of the ETF movement, they were passive index-based strategies that just tracked, called the S&P 500 or the Dow Jones, small caps, et cetera, et cetera. But now what we're seeing are unique strategies that are actively managed, and those are starting to come online even faster than some of the index-based products. So for us, we are actively watching these new ETFs, looking for new strategies. We want to put the money in the hands of active managers a lot of times that offer strategy diversification rather than just asset diversification, although both are important. With the rise in ETF adoption, what we're offered as an investment team is the ability to access new strategies to help continue to diversify the portfolio. So something that we'll continue to keep an eye on as these new ETFs come out are new opportunities for us to invest in unique ways.
Thank you, Zach. We're really encouraged by seeing a lot of the performance in the ETF space, always looking for new opportunities for our portfolios and the best way to express ways to either manage risk or seek opportunities from an ETF point of view. We continue to keep an eye on what's happening in that space, as well as what the Fed is doing and the implications that has for both the economy and, most importantly, the stock market and the bond market. Thank you for joining us this week on the Market Carver. We look forward to bringing you some more information next week. Should you have any questions, we please ask you to reach out. Call us at the phone number on your screen, scan the QR code, or to get more information, please visit our website at yourlifeafterwork.com. Thank you. Have a good weekend.